Hi, I'm Donald McIntyre, founder of Etherplan, and in this video I am going to talk about my prediction of Ethereum Classic 1000 for 2022, how the Ethereum migration to proof of stake will boost ETC. The topics I am going to cover are: 1. Miner migration is not the whole story. 2. The shift in positions is the real value. 3. The fifthening. And 4. The logic of the price prediction of 1000. So the big story in the whole blockchain industry in the last 2 weeks has been Ethereum Classic. It has gone up from around 26 to 50, and now it's trading around between 47 and 48. I think, and many analysts also think, that this is because recently Ethereum has tested in their testnet for the migration from proof of work to proof of stake, the merge, and it went well. So this increased the probability that they're going to finally migrate the mainnet in the second quarter of this year. And when that happens, the theory goes that the miners of Ethereum, which has practically the same or a very similar hashing algorithm as Ethereum Classic, are going to migrate to Ethereum Classic. And because the miners are going to migrate to Ethereum Classic, then the price is going to go up. Well, that theory is partially true. When a blockchain has more miners and more hash rate, it's more secure, and that attracts a larger ecosystem of dApp developers, users, and investors, and that makes the price go up, which brings more miners, and the cycle continues. And that's the model, the security model, and the economic model of proof of work blockchains. But it's not exactly true, because what really happens is that the price of a blockchain, of proof of work blockchains like Ethereum Classic, has to go up first, and then the miners come because they're looking for profitability. Miners are basically a normal business, and their model is to make money by mining. So they seek profitability, and the first, in terms of the cause and effect chain, the first thing that has to happen is that the price has to go up, and then the miners come to Ethereum Classic. And you can see this effect, and it's always the case that when the price of Bitcoin or Ethereum Classic or other proof of work blockchains go up, then hash rate follows after that. So the hash rate went up in ETC because of its price, very likely because of its price increase. Not because they started to migrate now. What's driving the price of Ethereum Classic is really, it is related to the Ethereum migration from proof of work to proof of stake, but it's really the price of Ethereum Classic, and that is really, rather than a hash rate issue, is a positioning issue. Ethereum 1, which is a proof of work smart contracts blockchain, is the second largest blockchain in the world and has a value of $375 billion, while Bitcoin has a total value of $842 billion. The fact that this blockchain, Ethereum, which is identical to Ethereum Classic, which is the original chain, is migrating away from proof of work, creates a vacuum in the market. Because there's not going to be a huge and large proof of work smart contracts blockchain at the base layer in the industry anymore. It's going to migrate to proof of stake. Today, Ethereum Classic is number 28 at these prices, and this is the real story, because when Ethereum moves to proof of work, it's very likely that Ethereum Classic is going to go up in the ranks, because the competition of Ethereum 1 is going to be deleted or erased from the market. Today, if Ethereum 1 and Ethereum Classic are exactly the same networks in design and operationally, and they're both proof of work, they're basically competing for exactly the same spot in the industry. But when Ethereum moves from that spot, then Ethereum Classic is going to occupy that need in the market, because the blockchain industry is going to be layered in the future, where you have the core that is going to be proof of work, and then on top you're going to have proof of stake, which are more scalable blockchains but less secure. So they're going to use the security of the core to make them more secure, and then you're going to have other layers on top of those two layers, which are channels and more scaling kinds of technologies like Lightning Network and rollups and stuff like that. And then you're going to have other layers like the dApps and the wallets and things like that. But the real story is this change, like huge change in the industry, because of this large blockchain that is going to migrate from layer 1 to layer 2. If you filter all the blockchains and you only consider the smart contracts blockchain, you're going to see that Ethereum Classic is number 10. Again, it's identical to Ethereum. Ethereum is identical to ETC. ETC is the original Ethereum. But when this one changes its features and its nature to proof of stake, then this one is going to be the only one in all this list that is going to be proof of work, smart contracts, and fixed monetary policy. And this is going to be very likely acknowledged by the market, and this is what is, I think, driving the price, not the fact that miners are going to migrate. Miners are going to migrate, but because the price is going to go up, so it's the other way around. If you filter further and you only if you only consider the proof of work blockchains, that alarm here in Oklahoma City is a practice for tornadoes. So it's just, don't worry, it's just every Saturday morning they do a practice run of the alarms. So if you look only at the proof of work blockchains, you're going to see that Bitcoin is the largest one, and then Ethereum, which is a proof of work blockchain now, is the largest, and its smart contracts, and Ethereum Classic is number 6. And in the middle you have Dogecoin, Litecoin, Bitcoin Cash, which are not programmable, just like Bitcoin at the base layer. So the huge change in paradigm is going to be when Ethereum goes away from this list, and Ethereum Classic 1 is going to be automatically the 5th largest proof of work blockchain in the world, and is going to be also automatically the largest smart contracts proof of work blockchain with fixed monetary policy in the world. That's extremely valuable. The market hasn't seen this because they always had Ethereum in that position, and when they realize this, which is already happening, it's very likely that Ethereum is going to start to go up in price. And when it goes up in price, another thing is going to happen, which is that everybody's going to realize that Dogecoin, Litecoin, and Bitcoin Cash are not programmable, and Ethereum Classic shouldn't be below them. It should be above them, just below probably Bitcoin as the largest smart contracts proof of work blockchain in the world. So the shift of Ethereum from proof of work to proof of stake, the big story is not. It is a big story, but it's not really the main driver, which is that miners are going to migrate to ETC, which is going to happen. But the big story is a positioning story, is a market kind of industry thing that is going to happen. And this change in positioning, and the fact that Ethereum Classic is going to be left alone in this extremely valuable position at the base layer, is going to be the main driver in my opinion. Then there's another driver in the short term, which is the fiffining. Ethereum Classic every 2.38 years lowers its reward per block to miners by 20%. So in the first era, from block 1 to 5 million, it paid 5 ETC per block. Then from 5 billion to 10 million, it paid 4. Then from 10 million to 15 million, which is the current era, is paying 3.2. And on April 25th, which is the end of the current era, it's going to start paying 2.56, which is a 20% discount. This is going to happen on April 25th of this year, in 30 days. This is going to lower the current inflation from 5.49 to 3.91. And this is another huge driver of value for Ethereum Classic. Because it's already proven in the market that when coins, for example Bitcoin, they reduce their supply, the prices usually after that they start to go up significantly. And this is something that is also, I think, driving the price of ETC. So if you have a higher probability that Ethereum is going to move from proof of work to proof of stake, that's one driver of demand for ETC. And if on top of that, more or less in the same time period, ETC is going to reduce its supply by 20%, that's a second driver. You can go and see when the fifth-inning is going to occur in this site. It is etc is.money, etc is money. And you can see it's a counter, and it tells you when the next fifth inning is going to occur. Fifth inning, it's because it's 20%, it's 1/5, so it's called a fifth inning. In Bitcoin, it reduces the payment every 4 years by half, so it's called the halvening. But in the case of ETC, we call it the fifth inning. And you can track it. It's going to be in 30 days, which is April 26th. And finally, the logic of the price prediction of 1,000 for ETC is driven by gold first, and then by Bitcoin, and then ETC relative to its share as compared to Bitcoin. So my price prediction for ETC starts with gold and then Bitcoin. In the case of Bitcoin, it's because we are in this point in the cycle of the bull market cycle. This chart shows here, shaded in gray, the 2013 cycle, and then the 2017 cycle, and this darker gray line is the average between those two. Ethereum, Bitcoin, after the halving of 2020, started to go up significantly during 2021, and it was following the typical pattern, but because of two main reasons, it got out of the pattern, and I think that it's very likely that in the next 3 to 6 months it's going to go back up and recover in price significantly to go back into the magnitude of increase in price that have happened in the past. This is because I think that the only reason why Bitcoin did not stick into this range is because around this time, central banks, the Federal Reserve, the European Central Bank, the Bank of Japan, and the Bank of England, they started to talk about increasing interest rates, and this took a lot of steam from the bull market, the crypto bull market in general. And then the other thing that started to happen around in this period was the war in Ukraine. So those two events, I think, have flattened the trend of Bitcoin. But I think that because Bitcoin has many other drivers, like just organic growth, increase in adoption, and it's being proven even by these events, by the war and monetary policy, that it's a very valuable asset, a store of value, and all its fundamentals, etc. I think it's going to recover very quickly in the next 3 to 6 months. My price prediction is not 140,000 like this entity. This entity is eCoin Metrics, that they create these charts and statistics, which are very useful. I think it's going to go around here by, say, July, September, August, October of this year, which is 125,000. And this is why. This is my chart for 2022 of my price predictions. Basically, gold is It's trading at around $9.5 trillion this year. And I think that if Bitcoin, first, if it respects the historic pattern, it should go up into this range. But when it goes up into that range of 100 to 200,000, I think it's going to reach a share of the value of gold of around 25%. If it reaches a share of 25%, it would be $2.362 trillion. And at that price, given the supply of Bitcoin, it's going to be a price of around 125,000. So even though Bitcoin could go to 300,000, 200,000, 250,000, or even 500,000 this year, my price target is more conservative. I'm just capping it at 25% of the value of the total market cap of gold, and that would be 125,000. In the case of ETC, because of the reasons that I said before, the fact that Ethereum is moving from proof of work and proof of stake and leaving that market position vacant for the world, and the only other blockchain to occupy it has to be Ethereum Classic. And because Ethereum Classic is the market is going to realize that Ethereum Classic is much more valuable than Doge, Litecoin, and Bitcoin Cash, and it's going to go and climb above those coin values or market caps. And because Ethereum Classic is going to have the fifth inning in April, for all of those reasons, I think Ethereum Classic should reach a price of 1,000, which would put it in a market cap of $135 billion approximately. It would be just above Doge, so it has a quantitative logic. That would imply a 5.7% of the share of Bitcoin. I think in the long term, ETC, as the second largest blockchain in the world at the base layer, is going to be worth around 50% for many reasons. You can check my other videos and articles that I wrote about this. It's going to have a value which is going to be eventually 50% of Bitcoin. But this year, because we are in that process, it might reach only 5.7%. But nevertheless, that would imply a price of $1,000. So this is my video about the effects of Ethereum migrating to Ethereum 2, which is a proof of stake blockchain, and they're going to drop proof of work. How Ethereum Classic is going to gain in notoriety, and the market is going to discover it and is going to occupy Ethereum's position at the base layer, and it's going to climb above Doge, Litecoin, and Bitcoin Cash. And how also the cycle, just the crypto bull market cycle, is also going to drive the price of ETC, and all of those things together, I believe, are going to make ETC climb from the current $47 to $48 all the way to 1,000. Thank you very much.